All right, back to work, back to work. Wednesday's over. Thursday is right around the corner. I want to make sure we're ready to make some money on Thursday's trading session. It is Wednesday evening. It is the 12th day of January, 2022. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Thursday's trading session. I got a great video in store for you guys and gals tonight. I got the S&P all loaded up. Nasdaq's here. Oil's here. Charts are all ready to go. Glad to see you are here right along with us. Got some great setups that we're tracking for Thursday. The bulls are well in control of all three of these markets. We got some ranges on the S&P and the Nasdaq. Boy, oil 4 legs up today into a trading range. So we definitely have some buying opportunities, buying breakouts, buying pullbacks in all three of these markets tomorrow. But I've also got some concerns, right? We got a couple major areas of resistance on the E-minis. We're 4 legs up right now on the oil. So you know me, even though I would like to get long tomorrow, I am definitely going to make sure we're ready for some reversals off the high. I can definitely see a couple really great reversal patterns to short the tops on the S&P, the Nasdaq, and the crude oil, and we'll talk about kind of how to tell the difference tomorrow between a pullback and a full-blown reversal as well. So we're talking the long side, we're talking short side. There is no shortage of opportunity to make our money on Thursday. Before we jump in, though, and get our hands dirty, get a lot to cover tonight. Before we jump in, though, please make sure you subscribe to our YouTube channel. I publish this video newsletter every evening with my best trade ideas for the following day. I don't want you to miss tomorrow night's video and all the ideas for Friday's trading session. So make sure you subscribe, hit that little bell icon there, because a lot of this stuff is time sensitive. And don't forget, if you guys have any questions, don't be bashful. I would love to answer any questions in the comment section. I'll look to answer those questions here after we publish the video tonight. And as always, I appreciate you guys carving some time out tonight. If you enjoyed this video as much as I enjoy making it, do me a favor, hit that like button here. I appreciate you guys supporting this YouTube channel, but make sure you subscribe. We got more videos coming later on this week, and I don't want you to miss them. In the meantime, though, let's get ready for Thursday. Thursday is right around the corner. Let's see what's going on here right now. Like I said, everything is pretty much bullish right now, right? We're bullish on the S&P, bullish on the Nasdaq, very bullish here on the crude oil. You'll notice there are a bunch of ranges, right? We get a range here, right, and a range here. Now, I'll tell you, the S&P, like I mentioned, the S&P is bullish here, so we definitely have some breakout potential, right, on the S&P here and on the Nasdaq right now. But, you know, I'll tell you, like I mentioned earlier, there's a lot of resistance up over here. So I'll tell you, I would love to find a nice reversal off of that high on both the S&P and the Nasdaq. I could also see, too, this market taking a nosedive, going lower as well. There will be opportunities to buy it as it pulls back. There will be pullback opportunities on this. But I'll tell you right now, you better be careful, and I'll talk about why I'm concerned about buying the pullback. It looks like we may be in store here if it goes lower here to really drop there. So we'll talk about those details here as we get deeper. The oil is in a really interesting situation right now. We obviously, we're 4 legs up here on oil today into a trading range. There definitely are some pullback opportunities here on the oil, and of course we got that kind of 84, 85 big round number waiting overhead. So there are definitely some breakout opportunities on the oil as well. I think there's a great potential for a reversal off the high, great potential for a reversal back down to that base of the channel we saw today. So again, there's no shortage of trades I'm watching for Thursday. Speaking of Thursday, though, let's make sure we check the schedule here for tomorrow. Tomorrow, of course, Thursday, the 13th. The big news for tomorrow is going to be that PPI report. There's a jobless claims report at 8:30 Eastern time, but I doubt you're going to see that move the needle very much. The PPI report, of course, is kind of like the cousin of the CPI, right? So we saw that 7%, that smooth 7%, right, CPI report year over year. Remember I talked about last night, right? The record is 7% 7.1. What do you think the odds are the real CPI was like 7.4 and they were like, you know what, let's just tap this down to 7.0, make everybody a little bit off, get everybody off the edge there, right? All kidding aside though, right, we're going to see tomorrow if we set some new records on the PPI report, right? So we're going to see how that plays out tomorrow. So the PPI report is definitely the big news of the session tomorrow. And of course, we get a Fed speaker there at 10 o'clock. Now, the Fed speakers are important right now, right? Because everybody's kind of obsessing about, will they raise rates? Will they start to taper? Right? So he may definitely throw a little bit of chaos into the markets as we go later on in the morning here. So tomorrow morning, right, bright and early, don't hit the snooze button too much tomorrow morning. 8:30 PPI, just like today, right? We had that big news at 8:30. That kind of kick-started the whole session. And then again, keep your eyes on that. I'll tell you, keep your eyes on that 10 o'clock to 11 o'clock block tomorrow, because we've heard a lot of these Fed speakers lately, and they've really shaken things up as they talk about how to get inflation under control and what to do about, right, the economic recovery. And so that's definitely something I'm watching here for tomorrow as well. Speaking of tomorrow, don't forget, we'll be in the trade room tomorrow at 8 o'clock Eastern time. You can learn all about how to join the trade room. I'll put all the details in the description of the YouTube video, or if you're on our website right now, I'll put a big button for you right below that to get registered and come join me tomorrow morning and every morning at 8 o'clock Eastern time in our trade room. Let's get back to our charts though. So now we know kind of what the schedule looks like for tomorrow. Let's take a look at the charts here and kind of see how we're going to make our money here on Thursday. The S&P and the Nasdaq are relatively similar. Oil is definitely kind of the oddball here today. So why don't we grab a look at the S&P to kickstart the day here today, or the video here tonight. What's the most important thing right now on the S&P? In my eyes, the two most important things on this chart right now are, one is this range, and two is this strong move down. I think those are the two most important factors if you could kind of boil this all down to two important things. And, here's why, right? Here's why. The range itself acts like a magnet, right? If you were to put a volume profile on this right now, there'd be a ton of volume right there, right? So that's going to be a magnet. And, as you can imagine, right, we're going to find levels of resistance up overhead and look for shorts back down. That's why I said earlier there's a lot of potential for some reversals off the high. We can also expect, right, to find some support levels and try to buy off of that low. Now, this brings me now to the second part of this, which was the strength of that move going lower. Now, think about what's going to happen here if this market rolls over and goes lower, right? All of that momentum for the bears could easily start to kind of pick up steam here, and we may end up shooting out the other side of that range. And bears would love to take this thing lower tomorrow, maybe all the way down to that Friday close, right? That's last Friday's close there at 67.5. We got under support there right at 61 3/4. So I think it's going to be, it's not going to be impossible, but it's going to be a little bit of a challenge here to buy it if it goes lower. And then of course, if we go higher here, all of this resistance up here. So we got to kind of work around this, right? It's a relatively simple chart. You can see we're basically range bound right in the middle, but you can tell there's a little bit of nuance to this, which will hopefully help keep you kind of out of trouble here right now. Real quickly here though, let's talk about up, down, and sideways, right? The markets only move in three ways. They move higher, they move lower, right? And they move sideways. I'm not really in the business of making predictions. I'm a trader, so I'm going to take whatever the market gives us here for tomorrow. If we sit and go sideways tomorrow, my job is to sit on hands. I don't care if it takes duct tape or a shock collar or some handcuffs or right, whatever, right? Zip ties, I heard someone say yesterday, right? But if we're inside that trading range, I don't care what it takes, right? Stay out of trouble inside that trading range. Ranges are not very productive place to be trading here. What if we go higher here? Right? What if we go higher? If we go higher, right, up into some of these areas of resistance, this will be a relatively bullish momentum, right? We got a little bullishness going into the range. It'll be a somewhat bullish, right, momentum here. Now, whenever I want to sell because of course the range is the magnet, but I have a lot of bulls on the chart. What's the best type of short setup that I can use? I'm going to use, basically what I'm going to do is I'm going to use a buyer failure pattern, right, to sell off the high. But most importantly, though, I'm going to use what I call the two-try rule, right? The two-try rule is very, very effective whenever we're trying to go against the trend, right? So what I'll do is I'm going to go up, right, get up into some of these areas of resistance, kind of ideally would be kind of get into some of these trend lines up here, right, up into some areas of resistance. Get this thing up, and then think about now, give the buyers, give them one try, give them two tries, right? And then think about that. The range below us is a magnet. All of the stop losses of those buyers will be hanging out right below that low. And we can definitely, right, we can sell right into those stop losses. Now, there's a lot of different kind of variations of this two-try, failure. One thing to keep in mind is we have a possibly a trend line coming up, right, off of this low. So if we really pop up higher here, buyers once, buyers twice, I can look for that short, and I'm not really in much trouble right there, right? But let's say we go up, we take out the trend line here, and then we come back in one. Yeah, see, that's going to be a little bit more difficult. In that situation, whenever we're worried about selling ultimately into a level of support, what we do is we look for a trap entry, right? A trap or a breakout pullback. These will probably be the two best entries, right? Shorting off that high, right? So we pop up, we run right into some overhead resistance up here, right? The buyers come in, they try once, they try twice. All their stops now are hanging out right below that low. I'm looking for a nice sell signal to sell off that high. And then again, think about that trend line coming up, right? And then try to hit it again as we roll back down into that trading range. Where would the target be on that? One target is always going to be the other side of the trading range. And the next target would be measure the amount above, project that down below, and that becomes your next objective. That's going to be target number 2, right? Kind of an easy way to think about there, selling off the high. Right? So really the big kind of variable is going to be how far up do we go and where's that trend line, right? That'll really be the big variable here for us tomorrow in the trade room. Now, of course, I'm sure you're wondering at this point, at what point can I buy this thing, right, as we're going higher? What we need to see is we have to see a breakout. Now, I teach a lot of different breakout patterns. I've got 4 or 5, I think 6 different breakout setups that I like to use in the trade room at this point. The simplest one and the most reliable one, right, if you're not with us tomorrow in the trade room, if you're trading on your own, the simplest one is going to be the 1, 2, 3 breakout, right? Now, look over here. See how the market ran up, pulled back, and then tried to go higher, but see how they struggled and they struggled and they struggled? Yeah. So what you want to see is you want to see them continue through that. Okay, that's the green light. So we want to see it push up, right? We don't want to see the buyers now try and try, right? That's not going to be good. We want those buyers to hold that pullback and go, right? Hold that pullback and go, right? So I want to see it go up. I want to see them hold the pullback, and I want to see them jump off of that moving average. Once I get that 1, 2, 3 breakout pattern, what that does is it basically takes the emphasis off that trading range. And then where does the mark? Well, let's talk about this. What you want to do is you don't want to chase after it now. What you want to do is you want to find a new channel off those highs. Okay, don't worry. Whatever you do, don't bother with a big channel like this. That'd be a waste of time. Okay, we're going to drill down to a faster time frame. This is a 6,000 tick chart. We'll drill down to a much faster time frame in the trade room. We're going to find a new channel off that high. We'll find we'll draw a trend line off the high. We'll use that trend line to find a new channel. And we always want the first test, right? I want to buy the first test off of that low. Now, remember, we're going to drill down to a faster time frame, right? This will be a much faster time frame tomorrow to take the entry. It's not going to be as simple as just buy the low of that channel. We like to look for an entry setup. My 2 favorite entry setups off the low of that channel are called failure patterns. We've talked about a little bit of that already. Trap setups failure setups and pullback setups. Now, I'm not going to go over all the specific entry techniques that we use here in the trade room here, right? The video is already pretty long already, but if you want to see the actual techniques that we use to signal the entries and to qualify the entries and the rules we use to avoid the entries that are more likely to fail, I'll put a little link up here in the upper right-hand corner for you for our quick start course. It's a great free trading course, and it allows me to go into a deeper dive into, how to find that 1, 2, 3 breakout, how to find that channel, right? And then how to drill down and actually pinpoint the correct entry, because the entry is the most, that's always the most difficult part, right? Now, if we do get that 1, 2, 3 breakout here, where do we think the market wants to go? Well, what you want to remember is the breakout leg is always the measuring leg, right? So let's say we go up, right? 1, 2, 3, we find that new channel, we drill down to find our entry, right? And then this leg, right? That first leg is going to be your measuring leg, right? That it'll be symmetrical, right? So think about 1, 2, 3, AB equals CD, right? Think about symmetry, right? A, B, C, D, that first leg and that third leg, right? Ultimately, these buyers would like to get up around this 47.58 tomorrow, right? If they really get going, right, we get a big range up there, 47.80, 47.5. That's probably not going to happen tomorrow, right? So watch that breakout going higher, right, for that entry long or sell off of that high. Now, how do we trade this as we go lower, right? Going lower is going to be a little more difficult to get long because, again, we've got this big, strong move down. And one thing we know about strong moves is they love to retest. And when they retest, what's going to happen? A lot of momentum for the bears, which is one problem. But the bigger problem is a big trend line coming down, right? And that trend line is that trend line's a bull killer, right? It really is. It's gonna kill a lot of the confidence these buyers are gonna have because they're gonna look at this and go, shoot, how do I get long now, right? Got that big brick wall coming down overhead. So what you want to think about is as we go lower, we are definitely going to want to use that same technique that we talked about to sell off the high. Use the failure pattern, but use the 2-try rule, right? So bears try once, bears try twice. All their stops are sitting right above that high, right? Now, again, there's a lot of different ways you can take this entry long. I like to draw trend lines off that low, look for that signal coming off the trend line, right? Sometimes we don't get the trend line, and we're just simply buying right into those stop losses, right? So keep that in mind as we go. And again, that trend line coming down overhead, it's really a lot of this is going to have to do with where that trend line looks at that time, right? If I can't get a good 1-to-1 right here, it's not going to be a trade that's going to be worthwhile. That's why I said earlier, it's just not going to be easy for us, right, to buy if the market sinks back down to low of that range. Okay, so we're going to use the 2-try rule with the failure setup, right, and look to buy it right back up again. If we get lucky with this and we have a lot of space to work with, we can then apply that same technique where it's a failure, right, and then into that breakout pullback and go back up on the direction. But that's going to be a little tricky, right? That'll be a little tricky tomorrow. What is probably a little more likely is if this market starts to roll lower, now we can start to structure some shorts, right? As we go lower here. If we go lower again, we have to assume the bears would love. Remember, this was the level I wanted last night, right? That was the level we had on our radar last night, was at the 88 to 85. You got to think that level is going to be easy to take out if the bears get control of this. And again, that 6.5 there, that Friday close. How would I trade this? Right? How would we trade this going lower here? There's really 2 patterns that come to mind. This will also apply pretty well to the NASDAQ as well. One of them would be the 1, 2, 3 breakdown. Right? So we take out that low, the bears come back, they hold the pullback, 1, 2, 3 breakdown. Now what do? You mark up that high or that low, you find that channel, right? You drill down, you grab your bull trap, you grab your buyer failure entry, you grab your pullback trigger. Again, I cover those smaller details. I cover all the entry setups, right, in that free quick start class, right, linked up in the upper right-hand corner. Okay, that's one easy way to do it. What is also kind of likely here is we may get that kind of pop and grind. So it may end up popping lower. We may not get that 1-2 go. It may just start to grind and grind and grind as the buyers come to grip with the reality they don't have a lot of momentum and they don't have a lot of open space overhead. So what do you do in that situation? Because it's not the same type of pattern anymore, is it? No, it's a lot more aggressive. In fact, that really signals these buyers are getting their butts kicked, right? Because they're getting very little pullbacks here and the bears just keep on hammering them. Draw that trend line nice and steep. Okay, do not waste your time with these big channels. This is way too strong of a move. If you get that, don't get me wrong, I would love to get that big pullback. Trust me, we'd all love to get that pullback. But don't hold your breath. Don't hold your breath. Mark up that trend line really tight. Draw it right on down off that high. Okay, and then what you want to do is you want to look for, get right above those prior, find a prior swing, get above that prior swing, look for that trap. Look for the buyers to come in and try to buy the pullback off. Look for them to fail, right? Failure, pullback combination, trap, failure, pullback. Again, I'm just drawing the screen right now, right? But that's going to be, again, you'll see a lot of examples of that in that free quick start class. Where do we think, right? Where will this market want to go to? Remember, the size of that first leg will usually be the best target on that next leg. Right? Trends will almost always go 1, 2, 3, right? A lot of times we're finding that channel and we're hitting it right there, right? Then this leg is equal to that leg. Once you understand those kind of core principles, everything gets a lot easier, right? When it breaks down and starts to grind like that, obviously that's a very aggressive, almost runaway sign now. That's when you go, okay, whatever pullback you give me that trap, right, above the moving average, failure, pullback, and go, right? And again, that leg right there, the breakout leg, is almost always equal to that leg right there. All right, guys? So now we get a pretty good idea how to buy it as it goes lower, how to sell it as it goes lower, right? And of course, how to trade it as it goes higher as well. We'll see what we get tomorrow on the S&P. Let's keep going. Now, a lot of this will apply to the Nasdaq, right? The Nasdaq is pretty darn similar. The one thing I like more about the Nasdaq is the Nasdaq has a ton of open space overhead. Right? Ton of open space overhead. The NASDAQ is more difficult though, because remember, all those, stay-at-home stocks, all the tech stocks that were on a meteoric rise in 2020, the NASDAQ is probably a little bit of a heavier market, right? Especially if we start to see COVID cases coming down. The Omicron it's starting to look more like a flu, more like a flu, right? Than the previous COVID. No offense, anybody who's currently sick with that right now. I know it probably sucks, right? But the reality is, the Nasdaq definitely is a little bit heavier right now than the S&P, just because of that kind of reopening, right, part of the market right now. That doesn't mean though, right, these buyers couldn't, right, take the sucker higher here, but it definitely has, right, those same kind of attributes, right? We get a range right in the middle that creates a magnet. That's one big part of this. We got that big move down. Right? So if we go lower, same thing happens. We've got that trend line coming down, right? All of that momentum going lower. And I'll tell you, the NASDAQ has this juicy range down there, 15,620, 15,600. There's Friday's close from last week. That's where those bears would love to get to, right, tomorrow here, if they can really kick this thing into gear. The buyers, of course, just want to go back up and retest those highs here. All right, so how do we trade it? How do we buy it? How do we sell it? Again, very, very similar here. If we go higher, we're going to have that trend line coming up, right? So what you want to think about is do we take out that high, right? Do we go all the way up, take out that high? The buyers come in, they try once, they try twice. One of the variations of this setup is you can find a trend line off that low, bring it right up around that high, right? And short off that, right, off that channel. Okay, right? That's a nice, easy way to get that short going. One of my favorite follow-up trades off that is if it drops off that high now, again, we've got the pendulum swing, right? The amount we go above the range is the amount we go below the range. So we know where the market wants to go in this illustration, right? Now we've cleared, right? We've cleared through that trend line now. Think about it this way. Draw that new trend line down, bring that new channel in, right? And hit that, right? Hit that trend line. 2-try failure, right? Buyer failure pattern using the 2-try rule because we're against the trend. And then again, I don't know what entry I'm going to use off the high of that channel, right? It might be a bull trap, might be a buyer failure, right? Could be a pullback combination. Again, you'll learn more about that in the quick start class, and we'll see which one we get, right? But we don't want to miss that first test, right? That first test, a lot of times what will happen is you might not have the confidence to short the top, or maybe you don't get a good signal, right? Sometimes it just drops off the high. You don't miss the next one, right? You don't want to miss that first test, right? As we come cruising over here, right? That's how we'll look at that short off the high here. How do we buy it as it goes higher? Same basic idea, same basic idea. We've got to get up. We've got to hold that pullback, and we got to go, right? We got to get a really strong push to those highs. Do not let a strong run up fool you. Right? Do not let that fool you. We're going to still look for that short back down. But if they get that strong move up, though, and they can hold that pullback and they can go, absolutely, right? Absolutely. Now, get rid of this channel, right? This channel will be bye-bye. If we go up, hold that pullback, right, and blast from there, right? What do? We mark up that high. We mark up that low. Again, we drill down to a much faster time frame. We get underneath prior swings. We look for failure setups, pullback combinations, right? And again, you'll learn all the rules to that stuff, right? And can see what it look like in that quick start class, right? So that'll be an easy way. And then again, where do we think that market wants to go? Well, it all depends on the size of that first leg. Right? That first leg, that's the breakout leg. That will determine now, anchor it right there, and that will tell you how far your next objective or your next target will be. And again, we get a pretty good idea of where the market would like to go tomorrow. We'll see if they can get that breakout that we're looking for. Same thing, of course, goes on the sell side, right? We roll over here. If we start rolling lower here right now. We got that trend line, coming down. You can almost kind of smell you're going to need to use a trap here. You can almost kind of smell it'll require a trap, right? It'll require a 1, a 2, a trap low, right? Get back up above that high, find that new channel, bring it on over, and grab that retest right there. Not a very, not a complicated plan, but that's asking a lot. That is a kind of a thread the needle right there. We'll see if the buyers can hold that low, right? Let the bears try a couple times, get that nice juicy signal candle. Again, you'll learn more about signal candles in that free video course linked up in the upper right hand corner. And then again, maybe it's a trap, a failure, a pullback combo, right, off the low of that channel, going back up into that trading range. What I think is the more exciting trade, and we'll see, I don't know if we're going to get it or not tomorrow. What I think is the more exciting trade, though, is to get this thing to move lower, get them to hold that pullback, right, and then make that run lower, because then you've got that nice 1, 2, 3 breakdown. All of that momentum now, right, for those bears. Don't worry about the support levels down here. If you have enough momentum coming off that moving average, it's almost a guarantee that you're going to see a whole hell of a lot of sellers selling off the top of that channel with really any of the setup patterns that we talk about in that video course, right? And again, the size of the breakout leg, right, is the size of that follow-up leg, right? So that will tell you kind of where that final target's going to be. And then again, if it really starts to, like I mentioned on the S&P, right, if we start to kind of pop down and start to grind lower, right? Again, don't waste your time with big channels like that, right? Don't waste some big channels like that. Draw that channel down, right? Find that trap and then go. Now, sometimes what will happen is, right? Sometimes what will happen is the market won't give you that nice, signal off of that high. Because we don't just blindly sell off the high. You've always got to look for a signal, right? And again, you'll learn my 4 favorite signals as part of that free trading course. What will happen sometimes though is the market will really pop right off that low. This is basically bears taking profit. Bears take profit, price bounces up. This will also apply to the S&P as well, right? So I'll kind of reward you for watching this entire video tonight. Anytime we have a really strong move in one direction, right, we call them open loops, right? We call them open loops. It's like a metaphor or a play on words. It's unfinished business. So we know that right, there's basically a magnet right at that low. So when I see the market pop up like this, right, and really bounce hard off that low, what you want to think about is don't confuse this with a reversal. It's not a reversal yet. What does reversal look like? It has to hold the pullback, right? It's the only way you can trust that move going higher. Okay, what's a better idea? A better idea is to wait for those buyers to come in, right? Try to get long off it, and think about right where's their pain, right? If you were a buyer, where would you go? Shoot, they got me again, right below that low, right? So once you see that nice juicy red, signal candle coming in, right? Those buyers are getting the heck out of the position. That is a great way to enter it as well, right? And again, this same technique can be used on the S&P as well, right? A lot of the S&P and the Nasdaq are pretty much interchangeable. And wouldn't it be amazing too if it came up right off that trend line, right? Like, and that might be where we get like that big channel. You know what I mean? Not very common, but that's a very good way to look at it, right? Remember, one most important thing, anytime you see a very strong move, right, don't let that sharp pullback fool you. All right. Now, if they hold that pullback and they run this thing higher, then okay. Now we have a bull trend, find that new channel, right? Does that make sense? Right? And then grab that first test. So sometimes you're going, okay, I'm going to short this thing, right? And it blows right to the high. And it's very tempting to go, oh, maybe I'm wrong. No. Wait for the buyers to come in and fail, hit it again. If they come in and hold it, okay, good for them, right? Sometimes things happen that we don't understand. Maybe news came out, right? Maybe a Fed speaker said something. I don't know. Who cares? Find that new high, find that new low, drill down to your faster time frame. And like I said, you do not want to miss that first pullback. That first pullback is the everybody in pullback, right? That's the one you want. You don't want to miss that one as we go higher, right? And then again, don't forget that leg. You see what all kind of comes together here? I hope by now, hit that like button if you're enjoying the video so far. You better subscribe because I'm just scratching the surface here on these nightly newsletters. All right, we're looking good. NASDAQ's pretty good. Again, a lot of what I just talked about in the NASDAQ can also apply to the S&P. Okay, we'll cover any smaller details tomorrow morning in the trade room. Over on the oil. Now, what are we going to do with the oil market? What's the most important factor right now on the oil? I think there are three important factors. One is this trading range. Okay, ranges act like magnets, right? Ranges love to rotate. The amount below the range, the amount above the range. We know where the market wants to go right now. Okay, that's one very big part of this. Two is a two-legged pullback, right? Two-legged pullback. Draw that trend line right overhead. Okay? Three would be another part of this. The third thing would be this channel. Now, why that channel? In all reality, that channel is almost a waste of your eyes, right? It's almost a waste of brain cells. It doesn't really matter because whenever there's a range involved, the range is the key, right? Whenever there's a range involved, the range is the king or the queen of the chart, all right? Bottom line, range is the most important. However, if you go back and look at this is basically just one big spike in channel. It's a spike up, right, that's kept on grinding. Now, why would that matter? Why is that a factor on this? Well, because if you've watched this YouTube channel or if you've taken any of my trading classes, you know that the base of that channel is where spike and channels love to pull back to. They love to pull back to the base of that channel. Now, hopefully you're saying, really, Joe? you want me to buy? No. I don't want you to buy that pullback, right? But I'm saying that this is where the bears want to go, right? The bears want to go back to that 81 area if this thing falls apart, all right? If it falls apart. I think that's, it's tough because right now, it's winter season right now. There's a huge, supply chain issue. And so I'm not going to lie. It's, I talked about the Nasdaq being heavy because of the reopening process, right? The tech stocks being overvalued, whatever. Oil's tough to want to sell short. Let's just face it, right? Everybody's piling on right now. You've got big time, major tops up here, 84.05. There's one more I forgot to add on there as well. But this is fundamentally, it's tough to want to short the oil market right now because of just everything going on right now. Oil and natural gas, right? It just is. But if we can get a nice reversal on this, I think that's going to be some really great money here for tomorrow. I think the sellers right now would love to short off the top, right? Because it's a range, it's 4 legs up. I also think the sellers would love to catch this thing rolling over, right? We'll talk about how to do that as well. I think the buyers right now would love to get this 2-legged pullback. I think the buyers right now would love to get a pullback back around that 82. And in fact, I think that would probably be the best place to get long tomorrow. It's not going to be that easy. We'll talk about why I say that in a moment, right? I also think, of course, the buyers would love to buy a breakout, right? Because the next big objective, this is like, what was the date on that? I can't recall now, right? But that's your big top, right? That's your big top up there at 84.05. I think the next one's like 84.86. If I recall. I just didn't put it on this chart. I think it's 84.86, right? It's like almost a year ago's high. So we got some big time highs up there, and they're probably acting like a psychological magnet right now. So we got the buyers trying to get that going. All right, let's talk about how to buy it, how to sell it. As we go higher here, right? As we go higher, 4 measured legs up. Now, remember what I said earlier? Remember how I said most trends are going to want to go 3 legs? Yeah, when the legs are really small, they oftentimes go 4, 5, or 6, right? Remember how I said earlier that we oftentimes get those 1, 2, 3 legs, right? We find that channel. Remember I said that earlier, right? Well, if those legs are really small, like these legs, 4. And usually these trends don't go much more than 4. They usually don't. 3 legs is typical. When trends go 4 legs, I always have a very hard time getting long above a 4-legged move. Now, tomorrow's a brand new day, so it does not mean we can't keep going higher, right? But that should be considered to be some pretty strong resistance along the top of that trading range. So as we go higher, right, how would I sell something like this? I would sell it with that 2-try failure, right? Wait for those buyers to try once, wait to try twice. I always like to sell off a level of resistance. So maybe it's a trap, right, above that high, right? Maybe it's a trend line with a hidden channel, right? I always try my best to sell short off an area of resistance. Okay, not just a major area resistance, but an actual resistance level as part of the entry setup. Now, again, I'm not going to go over a lot of smaller details on that, but you can learn those smaller details of how I find my favorite levels of support and resistance. I cover that in more detail in that free quick start class that I linked up right in the upper right-hand corner. Now, remember, this market now is going to want to rotate all the way back down, right? It'll want to rotate back down. So what you can do is you can grab a new channel as we go lower, right, and hit it again. Oftentimes, the move as it goes lower will be a trap entry off that high. So that's where you've got 2 really, I think, really nice looking shorts if we can get the right setup. Again, it's a big if right now because, again, we are so bullish right now, right? Remember, mark up the amount above, mark up the amount below. That's where we want to get to, right? Right back to that low, all right? Now, as we go higher here, how do we buy it? Pretty simple. We've talked about the 1, 2, 3 breakout. Ain't nothing different on this one, right? So the 1, 2, 3 breakout pattern, right? That 1, 2, 3 breakout, 1, 2, 3 breakout. Find that new channel, mark up that high, right? Mark up that low, and get that right and get that entry. Now, again, there's a lot of different entry techniques we can use. Two-legged pullbacks, traps, failures, pullback combinations. You'll see more examples of how we use those on our favorite markets like oil inside that quick start trading class. Okay, that's how we're looking for as we go, right? And then don't forget, right, depending on what the breakout leg is, if that's your breakout leg, then there is your target, right? It's not the first leg up, right? It's the breakout leg that we want to look for, right? I'll cover more details of that tomorrow morning in the trade room. If we go sideways, what do? Right? We do whatever we got to do to stay away, right, from the trading range. What if we go lower right now? Going lower is going to be a pretty interesting spot here. So the two-legged pullback is a really, really common setup, right? We go one leg, we go two leg. What will likely happen here is, and probably the ideal setup right now, is to get up, over, and go a little bit, just a little bit below that prior low. Right? If I could get like 2 or 3 ticks right below that prior low, right? Nice strong signal. That's a nice looking setup right now. Remember, you've got all of that momentum, right? Remember, anytime we see a big, strong move in one direction, there's like a bullseye right back at that high, right? So we've got the trend line coming down. We stair step back 1, 2, up, over. The ideal scenario here would be get me a little bit below that low. Right, little bit below that low. Get the moving average coming over. Give me the proper signal, right, and we're going back up, right, to that pendulum swing target. Off the high, right, yep, and off the pendulum swing. Okay. Now, this is also where things could get interesting here. So let's say, for example, right, let's say for example, right, here's one thing that the first thing I thought about today. And of course, I know we're so bullish right now, but I thought, all right, what if we rolled over and we start to grind? Right? What if we start to grind right on down that trend line? You know what to do now, right? You draw it nice and tight off that low, up around that high, right? You find that, sorry about that. You find that, right? You find that trap. Get above the moving average. Sorry for my poor drawing skills. They've gotten better over the year, right? So trap, failure, right? Pullback combo. There we go, right? That will be a nice short there if it kind of rolls over and starts to grind down that trend line. Another thing you want to think about again is buying right here, right? So what if the market did this? Because this is very likely. What if we chop around sideways here, and then the trend line's down there? By the time it comes down to that trend line, now we're way down here. Now what do? Well, now you use a failure pattern. But what's the problem now? A lot of momentum. Okay, so how do you deal with that momentum, right? We make that run lower here. Now, again, like I said, I think this is possibly the best place to get long tomorrow, right? But it's going to be a bit scary. It'll be a little bit scary here. So what do you want to do? You want to use those bears, right? Remember, this is not a reversal yet. It's a strong pullback. It's a nice deep pullback, but is not a reversal. Why? When is it reversal? It's a reversal when they hold and go. They have to jump off that moving average. Right? In a strong bull trend like this, every time the market dips below that moving average, buyers are there, right? Now, again, if it rolls over down this area here, let those bears, let them try once, let them try twice, draw that trend line, find that hidden channel, right? Whatever you do, just don't get short just yet, right? All those stops are right above the high. Again, I always think if I was a seller right there, where would I throw my keyboard? You know what I mean? Where would I chuck that mouse? That's right where it would be, right? You're not going to wait for it to go higher here, most traders, right? Think about where that pain point is. Wait for that nice signal and buy right into those stop losses. Then measure that move down. Measure it right back up. Okay? Now you've got objective number 1, back to retest the high. Objective number 2, back up to that pendulum swing. As the market now starts to go higher, right? Can I get that pop and pull back? Like I said, that first test is the best test. That's a 2-try failure, right? Into a pullback combination. Make sense? Right? And don't worry about this trend line coming down. Okay? The only trend line to worry about right now is this one right there. That's the only one you need to worry about right now. All right? And we'll talk more tomorrow, obviously, once we know more information. All right, guys? So that's how I'd like to buy it as it pulls back. We're going to have to utilize that 2-try failure and then try to find that entry as we turn right back up overhead. Okay, obviously the 1, 2, 3 reversal will work too. So if we were to, take off the downside, hold that pullback, right, and jam going lower, obviously, right? Same idea as the breakout going higher. Find that low, find that high, drill down to your fast time frame. Don't miss that first test, right? And again, if it really pops up like that, no, not a reversal, right? Once they jump off that moving average, the bears have it, right? The bears have it, right? So let those buyers come in. Let some other poor buyer try to reverse that thing. And remember, guys, it might reverse, but that reversal is only about a 30% winner, okay? We will see those 3 out of 10, those 30 out of 100s, okay? You will. So there will be times where it will reverse, okay? That does not mean it is a consistently reliable setup that you should build your account on, right? You'll go broke taking 30% trades like that, okay? Would you rather take the 30% trade or would you rather take the 70% trade? Right? I get it. I hate missing the move too, right? But it's all about the odds. It's all about the probabilities. We're going to take hundreds of trades this year, right? We got to make sure those odds are as high as possible. The better trade on that is that buyer failure, right? That pullback combination. And again, right? Leg, and we know where the market wants to go. If this market turns bearish tomorrow with that reversal, I would try to leave a runner target down to those lows because it could really evaporate quickly. Again, I think the only problem right now is on the short side is, again, there's just a lot of bullishness in this market right now, blind bullishness, right? Everybody sees it going higher. They're going to keep on piling on, right? Like it's Bitcoin or something, right? So just be aware of that aspect tomorrow. Be aware of the breakout going higher and watch those, right? Watch those up and overs, right? And back up from there. All right, guys? Boy, I've covered a lot in this video. We got us ready to go for tomorrow. Don't forget, I can make everything so much easier when you come out and do it with us every day in the trade room, right? I'm going with my favorite trades for tomorrow, but tomorrow we'll do it together. I'll put all the membership details, all the free course links. I'll put everything you guys need to get started, right? Or to, again, learn that roadmap that we use in our trade room as part of the free trading course, right? So grab the links in the description. And if you have any questions at all, don't be afraid to call the office. I'm always here to help out every step of the process. If you want help with brokers, data feeds, the best way to get started, I'm always here to help. And again, I hope by now you've subscribed to our YouTube channel. And if you enjoyed the video, hit that like button. All right, guys, we're coming back tomorrow night. We'll do it again tomorrow. In the meantime, what else can I help you with? What other challenges do you have as a trader? Drop me some ideas in the comment section, and I'll make a video about that here on the YouTube channel. That's it for me, though, guys. Have a great rest of your evening. Thanks for tuning in. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.